This meeting is being recorded.
Good morning, good afternoon, good evening, whenever you are. This is another part of the Become the cTrader Master webinar by the TopFX. So welcome again to this interactive meeting today. Of course, we will be continue our, let's say, our meeting with the cTrader indicators that every trader should know. Today we are going to talk about RSI. So we are going to talk about what is RSI, how to use it, how to apply it on the chart, what kind of information the RSI can give us, and how can we use it in everyday trading or in everyday analysis, basically. So let me just switch to some kind of a chart. Let's say I'm going to use the British pound chart on a daily time frame chart. As we know already, there is a plenty of the indicators you can apply to chart of the cTrader. There's no problem whatsoever with this. And then you can of course find the RSI indicator among them as well. So let's just start straight on with the information how to apply the RSI indicator on the chart. You go basically to this F icon here and you choose the oscillators. When you choose the oscillators menu, you go down and you can see that the relative strength index RSI is located here. Let me just apply it to chart right now, and you will see what the RSI will plot. So the options available for you in the cTrader are of course the source of the data. So it's the open of the candle, high of the candle, low or close. We are follow the close and the periods. In this situation, the default mode is 14 periods. So let me just leave this 14 periods here. So I don't want to change anything, and let me click OK. So we can see the relative strength index applied to the chart, daily time frame chart of the cable. What is going to measure this RSI? What the RSI is measuring actually? The relative strength index is going to measure price changes over the past X periods. In our situation, we have 14 periods. For example, what it means that if you set the RSI for 14 periods, it will measure the strength of this candle's price movement against the previous 13 for the total of the last 14 periods. If you use the RSI at, for example, I don't know, 55 periods, you will be measuring this candle's strength or weakness to the last 54 periods. The more periods you use, the kind of a slower the indicator will appear to react to the recent price changes. Okay, so you can, for example, set the RSI for 14 as a default one, and you can of course add one more. So you go to oscillators, you go to RSI, and then for example you will set the one on, I don't know, 55 periods with the color yellow, for example. That's it. So you can see that we got two RSI indicators. The top RSI is set for 14 periods, and the bottom is at 55 periods. How much more erratic is the is the 14 periods indicator than the 55 periods indicator? This is because the indicator is changing much faster due to the fewer inputs used to calculate the output value, basically. Okay, so you know that we can set the RSI for the different time period that is measuring. But what can RSI tell us? What kind of information can RSI provide us? Well, as an oscillator, RSI will read a value between 1 and 100, okay, on the scale. So we got like like this scale here, and will tell us how strong or weak price has been over the observed number of periods. In our situation, for example, 14 or 55. If RSI is reading, if RSI reading is below 30, which is this level here, traders will often say that it means that the price action has been weak, and the asset being, the asset that you are observing and apply the RSI to, it might be oversold. Okay, if, however, the RSI is reading above 70, like in this situation here, then the price action has been strong and price might potentially be, let's say, overbought. Okay, I say may here as an important, important qualifier, because a market can get even more overbought or oversold, because a market going oversold doesn't assure of strength, nor does an overbought RSI reading denote certain losses. Okay, so that's very important to understand. So this market can be overbought, but it doesn't mean that this market cannot go even more overbought. Okay, so we never know this. When is the actual top of the overbought levels, or where is the low for the oversold levels as well. So this is what the RSI tells us basically when we apply it to the chart. For example, one day, the daily chart of the British pound. What is then the basic usage of the RSI? We talk about the level of 30, level 70, overbought, oversold. How do we basically use the RSI? So, because the indicator can show potentially overbought or oversold conditions, okay, so the traders will often take this a step further to look for, of course, for the potential price reversal. So, the most basic usage of RSI is looking to buy when price crosses up and over 30 level, with a thought that price might be moving out of the oversold territory with buying strength as a price was previously taken too low. So this is this situation on the British pound. Let me just zoom in because we got a very nice example here. The price, as you can see, is going down, 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 down. So we got 1, 2, 3, 4, 5, 6, 7, 8 candles out of 14 is down. Big down candles here, which is why the RSI is reaching the level of 16. So that's extremely oversold, right? And what the actual meaning of that is that the price of the cable at the level of 1.0356 is extremely oversold compared to the 14 period backs, for example. Okay, so this is why we are looking on the periods here, and it's as well extremely oversold when you're looking on a 55 periods down, 55 days back. Okay, so in that situation, that might be basically perceived, this kind of a price action and breaking below the level 50 might be perceived by the market participants as extremely oversold, which means cheap, basically. Okay, and then what happens? Market goes up, bounces, and goes way, way, way higher. And the RSI, the fast one, 14, and the slow one, 55, is slowly, slowly moving higher. Sooner or later, it hits the level of 70 again. And as you can see, we got bearish reversal here, and then market goes lower. The other very good example is that if we talk about the oversold and or overbought market conditions, as you can see here, for example, the momentum indicator, which is the relative strength index, the RSI is going up and the price is going up as well towards a certain level. The RSI hits the level of 70, which means the market conditions are now extremely overbought, and the market pulls down a little bit, yeah, a little bit lower. Then again, the market jumps from the level of 50, which is the neutral level. The market jumps back up even more than the last time because this high is at the level of I can't even say that 75, I guess. And then of course we got a new high here as well, where this high is higher than this one. And then when we hit this, when we even overstretch this move to the upside, the correction comes and the market sharply goes down from the extremely overbought levels. All right. So the RSI indicator can be applied on numerous timeframes. Like any other indicator built off of the past pricing information, it certainly will not be like predictive, okay? But when matched with the appropriate market environment, RSI can be a helpful tool for working with the range-bound market conditions on the multiple time frames. So you can basically use this indicator uh, when you are a breakout trader, when you want the market to do some kind of a breakout from the consolidation. Of course, you can apply this indicator on a daily time frame chart. You can apply it on a 1 hour time frame chart. You can apply it to 5 minute time frame chart. Not a problem, but you need to know what exactly you are looking for when you are using the RSI, because there are some kind of a pitfalls of trading with RSI. Okay. um, Inherently, the RSI presents a flow to traders because RSI by its nature looks for reversals in price, okay? But buying when RSI crosses above 30 or oversold traders, oversold market conditions, traders are buying a market that is already been going down, inherently a counter trend trade. Okay, so if you see market going down, this is the downtrend by definition, and traders most likely will see the overbought market conditions. They will try to buy. The RSI traders that base their strategy on the RSI 30 and 70 levels. Okay, overbought or oversold levels. And if a trader is selling as the RSI crosses below, for example, 70, the market has been going up enough to be overbought, and the trader is, of course, initiating their sell position. Okay, but if the market is ranging, okay, this can be a desirable trade in an indicator, as traders can often look to initiate entries in a range with the RSI. However, if the market is ranging, the results can be unfavorable as price continues moving in the trending direction, leaving traders that had open trades in the opposite direction in a compromised position. All right. So, for example, if you let's say see this kind of a market behavior and market is going up and the market is going up again, if no one said that there cannot be another swipe to the upside and then another RSI hitting another RSI level hit by the by the market, for example 77 points this time. So no one said that there won't be another higher high here in this situation. So when you look on this indicator and solely by judging the 70 and 30 levels as the overbought and oversold levels, you might get caught by trading the wrong direction, basically, because the market can get more and more oversold or more and more overbought and might continue the uptrend. So every time you are trying to catch the reversal of the market, you are basically a contrarian trader trying to get the market reversals. What I'm trying to tell you is this kind of a situation. Okay, we hit the level of 30, then there's a pullback. So traders are entering, for example, the short orders. The market goes down a little bit, still waiting for market to go even lower, for example, towards the extremely oversold conditions, but the market does another swing high. Okay, so this is where this traders were caught, because the trading environment is not for the ranging market, but it is a trending market. This market is trending up, which is why using this kind of a overbought and oversold terminology for this kind of a market might be a first pitfall that most of the traders can fall into, basically, while using this kind of indicator on various time frames. Okay, so what else can we do with the RSI? Let me just tell you some kind of a another, like a um, let's say, strategy, or like a plan to use the RSI is to use the divergence. Okay, so let me just find another market where the divergence is much more clearer than it is here. Let's say maybe gold. Let's see. Let's take a look at gold. What it is here. Let me just find some kind of a divergence. This is not divergence. There is very nice divergence here. So let me just get rid of this indicator. 52 periods. Let's stay with the 14. And what do we see here? Let me just zoom in, because we are going to concentrate on this part of the chart. So price of gold is going up, it's going up, it's going up. We got some sort of the market movements. Yeah, we are breaking the high at 1958. We are still going up. Already we hit already during this movement to the upside. You can see almost all the candles are green, which means the momentum is very strong, and RSI is moving towards the level of 70. Finally, this market breaks the level of 70, printing the number of 73. So we are at this level, 2009. Then we have some kind of a consolidation, and then it is another high. But now take a look at this. If you have another high, let me just show you. Yeah, that was the level, and then you have another high, this one. What's going on the RSI? What's going on with the RSI? Let me just take the arrow line. Extremely overbought. And what's happened next? It goes lower. You can see it here. And then the price is going even higher. Look at the RSI. RSI is going lower. The price is going consolidation, even higher here, towards the level of 2000 and, let's say, how much is that? 2077. Okay. What is the RSI doing? Going even lower. And that situation between the market keeps doing the higher highs and the momentum oscillator, or RSI, or any other indicator, by the way, not doing the higher highs but moving basically lower, is known as the negative divergence between what is price doing and what is the indicator doing. And only one of them might be, of course, positive. Yeah, only one of them might reflect the correct state of the situation. And as you can see, because all of these highs are being done on a lower momentum, lower RSI, they might be considered as a trap for bulls. And then, of course, you can see big correction comes within the few days, and it lasts for at least 2 months. Yeah, it's almost 2 months, and then the RSI goes down to the level of 40. There you go. There's the level like I don't know, 35 or something like this. Yeah, 35. There you go, 35. Bang on. Okay, so that's another way to use the RSI indicator. However, you still don't know which one of these peaks here in the RSI is the last one, and when there's, for example, our situation, when there is a negative divergence, when the sell-off will come. So you need to help yourself by using, for example, candlestick patterns, price action patterns, price patterns, head and shoulders, whatever, something like this. And then, of course, the possibility to nail exactly this moment when the divergence is too much for every market participant, and then something breaks to the downside in our situation, is the moment you have been waiting for, basically in trading the divergence on the RSI. So let me just show you guys one more market. Let's see, what do we have here? Maybe something not that much exotic, maybe US dollar to the Japanese yen. What do we have here? Take a look here, guys. Is there a divergence between this high and this high? You can see we got the 73 reading, we have the 76 reading, no divergence, okay? But the market conditions had been overbought here. Then it was even more overbought. Then it was even more overbought because the market keeps going a little bit higher after the pullback. After the pullback keeps going higher. Finally, the bulls couldn't basically sustain this up move, and big sell-off happens. As you can see, 1, 2, 3, 4, 5, 6 red candles out of 14, and you got this big massive sell-off towards almost the level of 30. So basically 31, well, the market is oversold technically, so we got this bounce here towards the level of 50, which is the level of which is the neutral level. So it's neither positive, neither negative, neither bullish, neither bearish. Okay, so it's kind of a common situation when market participants are trying to hit this level in order to see how the market will behave when the neutral level is hit. So another example, let's see, because I'm trying to find some kind of a divergence again, maybe positive divergence or something like this. No, no such a things. Like here you can see you got the lows here, and then you got another low, so nothing is wrong. This one is lower than this one, so not a problem whatsoever. So US dollar to the Swiss franc still the RSI is not showing any sort of the divergence, which means basically that this movement on this market might last a little bit longer. However, of course, we got the overbought, extremely sold reading here 21 points. So from these levels here, the market might be ready to pull back higher towards some kind of a certain level, like a technical resistance or moving average or something else. Okay, so please be aware of the situation when the market is hitting this oversold and overbought levels. However, if the market is trending, it might be kind of a tricky to correctly read the market intentions, because, as you know, the trend is as they say on the stock market, the trend is your friend, and the trading using the RSI is most likely always a kind of a contrarian trade, when you are basically trying to nail the market reversal level. Okay, so it's like a kind of if market goes up and it's overbought, then you are going to say, okay, that's a good level for them because it's overbought, it's too expensive, maybe it pull back to the downside. Okay, if the market is going down, you are apparently, if you're using this overbought oversold of course levels, you might be looking to buy because the market is oversold, so it's very cheap. So half price yeah, promotion sales or something like this. So market participants might be looking to buy at the discount price, while the downtrend might be that strong that only a bounce will happen, or like on a shallow pullback, and then down movement will be continued. So my conclusion is that that might be a very good idea to use the RSI with the other indicators, with the other strategies as well, to filter the negative, let's say false signals and the noise that is market is sending every day to us as of course analysts and as a trader. So we know to increase the accuracy of our strategy, to increase of accuracy of our analysis, to increase of accuracy of our trading, this might be a good idea um, to uh, to use the RSI with conjunction with some kind of other part of your trading system. Okay, guys, thank you very much for your time. Thank you very much for your participation in this webinar about the RSI, one of the few indicators that can be used by the beginner trader straight on, just from the start, because it's that easy to understand, that easy to apply. And as you can see, there is no problem to do this in the cTrader whatsoever. That's one of the indicators, technical indicators, that every trader should know. That's everything from me for today. Thank you very much for watching this webinar, and I hope I see you guys next week. So for now, take care and bye bye.